The S&P opens up. The next stop is the 6,000 decision points. So last week's market action was like watching a cat decide whether to jump off a shelf. Hesitation, commitments, regrets, and then chaos. Anyway, levels to watch on the charts. We're going to be looking at 6,000 as the next decision points. Will it break out? Will it reverse? The VIX is below 20, so there's no imminent crash signals. We're not seeing any scaremongering from there. The overnight futures for the moment are suggesting a small bounce, but there's no real directional shift, and I still remain bearish on my income swings and waiting for a clear breakout confirmation. Or reversal for that matter. Let's look at the charts. Last week, or middle of last week, we saw the eventual breakout. So multiple attempts, to be fair. There's small ones there, multiple intraday breakouts. So we saw the SPX eventually push to new all-time highs. Thursday, that retreated very quickly. Hold back, develop this very small, teeny tiny range at the high of the larger range, just to have these things overlapping. So we have the break out and the break in happening at the same time. Again, a small pattern overlapping a large pattern, and that obviously led to the eventual downward movement. So we basically pushed through the bear trigger that we looked at, so the hedge needed to get on for the bull trade, and then we needed to flip to bearish to profit from what we thought was going to be the downward movements. As always, the surprise is the speed of movement. These things generally don't go the way that we think that they will. The Dow and the other indexes were pushing hard and fast, and the S&P's just been stuck in the mud the last couple of weeks. So it was nice to see the S&P finally put in a speedy movement. So once again, we're at a inflection point. The 6,000 level is looking interesting, mainly because it's a big psychological round number. I've got the range low actually marked off a little bit lower, but I don't really worry about splitting hairs. So the next thing for me to consider is, will we see the push lower, the breakout, pullback, and continuation of the larger movements? We can see this a little bit clearly on the daily chart at the top left there. So looking for that breakout pullback, or will we reverse? So we'll be looking for that tag and turn off the range low, rally, just a little bit of a pullback, create the apex of that V for our reversal, and see if we get price again go from the range low to the range high. Because we're inside the range, I've got to assume scenario number one is the same thing continues, which is price continues to be range bound, and we see that reversal. And then scenario number two is going to be the breakout and the continuation of the downward movements that we saw start on Friday. As of yet, we're still in the pre-markets session as I'm recording this, and there's no real clues in the futures. There's no major bullish turn. There's no full-blown breakdown, so there's no clues there. The VIX is not really going crazy. If it does climb past 20, then we'll talk about more extreme downside risk movements. But the reality is until something new happens, the same thing's going to continue. We're inside a range, so we've got to presume that that's going to continue for the moment. For the moment, though, I am bearish, waiting for the indication of reversal or continuation, as we've traded from the range high down to the range low, and we're just waiting to see what develops as per the patterns that I've just described there. So a V-shaped reversal for the bullish, exit the bears, get back bullish, or the bearish breakdown in that scenario number two. So for now, it's another waiting game, but one that could pay off again should the next major move arrive. Here's a fun fact. Did you know the term double bottom was inspired by the W pattern resembling two mountain peaks? And while widely discussed, less than 15% of these patterns lead to significant breakouts, according to modern studies. So despite their popularity, the double bottoms don't always guarantee a clear outcome. They're better understood as potential setups rather than certainties. So a vital lesson is to never rely on a single pattern without confirmation or a proven data-driven system like our SPX system. If you're tired of watching the charts all day and you want to trade SPX options in just minutes per day with a system that actually works, it's rule-based, it's mechanical, there's no trend chasing, we know exactly what we're doing before it actually happens, and we're trading for income, so we don't need the move to actually happen to make money. We'll get paid a little bit quicker if it does. So traders are using my SPX income system and seeing real results now. There's no more guesswork. Just click the link next to this video and and you'll be taken to a free training where I outline one of my favorite money-making patterns. So click the link and I will see you over there.